This one candle alone is responsible for making me over $100,000 just in the month of June. In this video, I'm going to explain to you how this one candle could literally have you catching every single reversal in the market and getting into the best stocks in the market. And the best part about the strategy, it is so incredibly simple. All you have to do is wait for the specific criteria, and then you have a beautiful trading setup that sets up. So without further ado, let's get into the video. I'm going to teach you everything you need to know about the 30-minute pivot. So before we actually get into the 30-minute pivot, I want to help you understand how to actually effectively find stocks that get set up for a 30-minute pivot. Now, this can work on pretty much any stock in the market, maybe even any crypto or Forex, because the strategy just works so well. This trend could either be to the downside or it could be to the upside. Like right here, we're clearly trending to the upside. Another thing that's going to help is using a key level or the moving averages. That way you know where to focus on to look for a reversal. Now, we want to understand that this strategy simply gives us a high probability reversal level with incredibly low risk because we are trading the trend. So whenever the market is in an uptrend or the stock that you're looking to trade is in an uptrend like this, all you're going to be waiting for is the stock to pull back a little bit, come into a key level. So this could be a moving average like I have right here, or it could be a key level of support. And then what you're looking to do is wait for that 30-minute pivot to set up on the 30-minute time frame. But the most important thing is finding the stock they are going to trade and using that daily time frame as a key support level or a key resistance level if you're looking to trade the downside. And from there, what you're looking to do is switch down to the lower time frames once you find that stock. So I'll give you a perfect example. Let's say, for example, this is a stock that you want to trade and you really want to buy this stock right here. This is a name that you want to get into. You like the technicals, you like the fundamentals. There's a setup here that you're liking. Instead of guessing where the stock is going to reverse and go higher, what you're going to do is wait for that 30-minute pivot and buy it off of a key level. So for this example, you could see this is clearly a key level right here. That's how we know that there's a probability that this stock will reverse off this level. But the issue that many traders have is they blindly buy a reversal just because they think a stock is tapping that key level. That is where the 30-minute pivot magic comes into play, because now instead of just guessing that a reversal is going to happen, you're using a high probability reversal strategy to make sure that the reversal is likely going to take place and your risk is effectively incredibly low. So ideally, what I personally look for is stocks that are already in a strong trend. I really love to use this reversal strategy on stocks that are already super strong. I don't want to be chasing stocks that are all the way down here on the bottom of my screen, because those stocks aren't going to have as big of a reversal because they're not leading and trending stocks. I want to look for stocks that are already making very strong moves and then catching them as they kind of reverse after a pullback off the highs. So for this example, this is the ticker ARM. This made an incredibly strong move of about 67%. From there, over the last few days and the last few weeks, it's been pulling back into the key moving averages. So you can see this is the 50, 21, and 8 EMA. So it came into the 8, couldn't hold it. Now it's into the 21 EMA. And this is an important spot because you see last time it tested the 21 EMA, it actually held right off that spot and made a massive move higher. So this is likely an area of interest for buyers to look for a reversal. But now, instead of just guessing that the stock is going to reverse right when it taps that level, what I'm going to do is use that 30-minute pivot. So once you find a stock that you want to trade or a stock that you like and a stock that you can buy, you're going to go down to the 30-minute time frame. All right, so now that you're on the 30-minute time frame and you know that this stock is starting to bounce off of a key level, what you want to wait for is the first 30-minute green candle to form. And this is incredibly simple. If you have colors on your charts, the green should be incredibly easy to see. So for example, you could see that this candle right here is red, 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 green. This is the first green candle that is formed right off of our key level. Now, the reason why this is so important is because the 30-minute green candle tells us that during the 30 minutes, buyers were actually able to control the whole price movement up until the close. Because you can see on every other time, maybe these buyers were able to step in a little bit, but they weren't able to control into the close, meaning that sellers were overpowering the buyers. But because this candle turned green on the 30-minute time frame, that tells us that during those 30 minutes, buyers were able to regain control. And this is when the real buying starts to come in. And this is why this reversal strategy works so well, because now we know there's a good chance that this will hold. So once we find the first 30-minute green candle, what we want to do is simply mark out the high and mark out the low. Now, the first 30-minute green candle by itself does not tell us to take the trade. The trigger is actually the break over the first 30-minute green candle highs. So when I mark out the high like this, our entry is going to be on a break over. So we have and we must have to wait for a break over. So right here, you could see the stock ends up breaking over. We don't have to wait for any time frame close. The moment the stock takes out that 30-minute green candle high, that is going to be our entry. So immediately you're going to enter right here into the trade. From there, the stop loss is going to go to the 30-minute green candle low. So the lowest point that the 30-minute green candle reached, which was right here, and you can see this is my stop loss. Now you can pretty much see I have incredibly small risk. Let's say I take the long position right here. My stop loss is right here. My risk is incredibly small. It's only about 3% on the stock if it ends up coming all the way down and stopping me out. And you want to target the highest point of the day, which was right here. You can see this is basically where the stock opened up at and the highest point that I traded. Now you're set up for a 6 risk to reward already with incredibly low risk and high probability that this stock is going to reverse. Why? Because it's coming off of a key level. It has a 30-minute pivot, which makes our probabilities higher. And we know that this is a stock that's been trending and leading, and the market's trending as well. So we're stacking all these probabilities together to make sure that we have an incredibly high chance for a reversal to play out. You can see as I play this out, the stock ends up coming down a little bit into the entry, but it does not stop you out. And that's the most important thing. You have to understand that as long as the stop loss doesn't get taken out, the trade is valid. Another way you could trade this as well, let's say you missed the initial 30-minute pivot, what you could do is wait for a retest of the 30-minute pivot. That means you could have bought in right here if you missed this initial entry right here. But as long as your stop doesn't get taken out, you're good for the trade. And then you can see this one ends up coming all the way up to our target right here. You end up trimming a little bit of the position. And then now the real power of the strategy comes into play because we're in such a strong stock. When you zoom out on the daily time frame, you'll end up seeing you actually don't have to sell the full position when it hits the previous day's high right here. What you could do instead is swing the position with some cushion and see if this continues to go higher, because now you could see the stock is trying to break out of this big base. So there's a good chance it might even come all the way off this low and come all the way up to this level right here at this high at 428. And now you just caught an absolutely monster trade. Here's another example of another trade that I took this month using the 30-minute pivot. This is on the ticker ALAB. You could see it's coming into a key level of support. And again, it's also into the 21 EMA. And notice why this is so important. It's because this level right here, this 21 EMA, this red line, continues to hold every single time the stock touches it. So what do you think is going to happen when the stock pulls back into that level? There's a good chance there's going to be a high probability area where the stock can push off of. Now, once you know that the stock is setting up to come into that key level of support, again, you don't want to just randomly buy it. You want to wait for your 30-minute pivot and come down to the lower time frames. What I like to do a lot of times is the stocks that I am watching, what I'm going to do is I'm going to set an alert at the key level. So you can go like this, and then you can go to add alert on this level right here. And then from there, that's going to tell you when the stock reaches that level. So you can click this, and then you can add your alert on the stock. All right, so now you can see we're down on the 30-minute time frame. And what do you notice? Every single candle going into that 21 EMA was red, until it tapped the 21 EMA and formed the first green candle. This is incredibly important. You want to mark out the high and you want to mark out the low. The moment the stock breaks over that key level, you can also use the 5-minute time frame to see when that break happens. So this was the high of the 30-minute green candle. The moment it broke over right here was your entry, and then your stop loss went to the low. Going back on the 30-minute time frame, you could see we're going to set this up as our stop loss. We're going to set this up as our entry, and then that's going to be the trade. And we're going to look to target the previous high right here. As this continues to play out, you'll see that this ends up giving you a beautiful trade with incredibly good risk reward. That's the most important thing, because you'll notice the stop loss is so small. It's about 3% on this one again. And the win would be, a 6 risk reward, which is incredibly good. You catch a beautiful reversal on this. And again, as the stock continues to go higher, there's no reason to sell. You can continue to swing it if you want to and catch an absolutely massive move higher. I also want to show you guys one final example of how you can use this strategy even when you're buying leading stocks in the market. So a stock that might not be testing the 21 or the 50 EMA or is already breaking out, you could still use the 30-minute pivot. How? You wait for the stock to break out of a key spot. You wait for it to pull back into a key level. That could be the retest of the breakout, for example, or the 8 EMA. And then you wait for that 30-minute pivot to set back up. So for this example, this is a stock that I traded. It broke out of this massive base. I ended up missing the original breakout, so I didn't take that trade. What I did is I waited for the 30-minute pivot to set up. So you can see as the stock broke out, made a massive move. From there, it pulled back 1, 2, 3, 4, 5 red candles in a row. First green candle was printed right here. I marked out the high and I marked out the low of that candle. And then from there, I used that low as my stop loss and this break right here as my entry. I entered right here, put the stop loss at the low of this candle, and then from there, caught an absolutely beautiful move to the upside with little to no risk on this reversal. Again, what you're looking to do is catch the long right here, put your stop loss at the low, and then you're going to target these highs right here for a beautiful risk reward trade. And as long as the stock doesn't stop you out and you want to swing it overnight, you can continue to trade this, meaning that the risk reward can get better and better and better using the correct exit and trimming strategy. Most important part about this strategy is making sure that you're trading within the trend and you're looking for stocks that you really want to buy and be in. For example, I always make a list every single week of the stocks that I really want to buy, the true market leaders, the ones that have been incredibly strong that I maybe missed during the rally. And what I'll do is wait to buy these on weakness. The strategy is called buying relative strength stocks on market weakness as they pull back and waiting for a high probability reversal using that 30-minute pivot. I've seen traders add this into their toolbox, a 30-minute pivot, and become profitable within pretty much a month using the strategy. If you can wait for these incredibly high risk to reward areas where you can catch these reversals and wait for these pivots, I promise you it's going to completely change your trading. If you enjoyed this video, make sure to subscribe and like down below. If you want more videos like this, comment what topics you want me to talk about over the next few months as I give you guys more educational content. And I'll see you guys all in the next video.